Welcome to YCC Capital Macro Research. We don't follow headlines, we follow the data. Every day, we analyze the world's largest economies, financial markets, and geopolitical developments to uncover the structural forces shaping tomorrow's investment landscape. Let's begin. Japan has entered one of the most consequential economic transitions in decades. After years of deflation, ultra low interest rates, and subdued wage growth, the country is now navigating a fundamentally different macroeconomic environment. Inflation has returned, wages are rising at the fastest pace in years. The Bank of Japan is gradually normalizing monetary policy, and corporate profitability remains resilient despite a rapidly changing global backdrop. The key question, however, is whether these changes represent a durable structural transformation or merely a temporary cycle driven by external factors. Throughout this presentation, we'll examine the latest data across growth, consumption, manufacturing, labor markets, inflation, financial markets, and trade to understand where Japan's economy is headed next. Japan quarterly GDP contributions by component. We begin with the broadest measure of economic performance, GDP growth and its underlying drivers. Japan's quarterly growth remains positive, but the composition of growth continues to shift from quarter to quarter. Rather than a synchronized expansion across all sectors, economic activity resembles a relay race where different components take turns carrying overall growth. Private consumption has become more stable as wage gains gradually improve household purchasing power. Investment spending has also contributed positively during several quarters, reflecting continued corporate capital expenditures supported by strong balance sheets and semiconductor-related investment. Net exports remain volatile. Given Japan's dependence on international trade, fluctuations in global demand and exchange rates continue to create meaningful swings in export contributions. Government spending has provided periodic support, although fiscal policy is no longer the dominant growth engine. Overall, GDP growth is expected to remain modest but positive, suggesting that Japan's expansion is becoming increasingly self-sustaining rather than relying solely on policy stimulus. Japan industrial production manufacturing has experienced a difficult recovery over the past several years. Industrial production suffered enormous disruptions during the pandemic, followed by supply chain bottlenecks and weaker external demand from China and Europe. More recently, however, year-over-year production has stabilized around positive territory. Although monthly volatility remains elevated, the broader trend suggests manufacturing activity is no longer deteriorating. Several industries, including semiconductor equipment, precision machinery, and automotive production, have benefited from improving global investment cycles. The key takeaway is that Japanese manufacturing is transitioning from contraction towards stabilization rather than entering a powerful expansion. Production growth remains positive but measured, reflecting an economy that is improving steadily instead of overheating. Japan capacity utilization. Capacity utilization provides another important perspective on industrial health. After significant weakness during the pandemic, utilization rates have gradually recovered as factories operate closer to normal levels. The year-over-year trend has moved firmly into positive territory, indicating stronger use of existing production capacity. Monthly readings remain volatile, which is typical for an export-oriented manufacturing economy exposed to changing global demand. Importantly, improving capacity utilization often precedes additional capital investment. As factories become busier, firms eventually face decisions about expanding production capacity through new equipment and technology investment. This gradual improvement supports the view that Japan's industrial sector continues to strengthen, even if the pace remains moderate. Japan PMI. The Purchasing Managers Index offers one of the earliest signals of economic momentum. Manufacturing PMI has finally climbed above the expansion threshold of 50 after spending much of the past 2 years in contraction. This improvement reflects healthier export orders, easing supply constraints, and better production conditions. Services PMI remains comfortably above 50, highlighting the resilience of Japan's domestic economy. Tourism, business services, transportation, and consumer-related sectors continue to provide stable support. Consequently, the composite PMI also remains in expansion territory, indicating that overall private sector activity continues to grow. The divergence between manufacturing and services that characterized much of the past 2 years has narrowed considerably, pointing toward a more balanced economic expansion. Household consumption. Household spending remains one of Japan's most important challenges. Nominal consumption has generally remained positive because households are spending more yen as prices increase. However, real consumption, which adjusts for inflation, has struggled to generate sustained growth. The encouraging development is that as inflation moderates and wage growth strengthens, the gap between nominal and real spending is narrowing. Consumers are beginning to regain purchasing power after several years in which inflation outpaced income growth. Although households remain cautious, improving real incomes should gradually translate into stronger consumer spending over the coming quarters. Since private consumption accounts for more than half of Japan's GDP, this remains one of the most critical variables to monitor. Labor cash earnings. One of the biggest structural shifts in Japan is occurring within the labor market. Labor cash earnings have accelerated meaningfully over the past 2 years, reflecting both annual wage negotiations and persistent labor shortages. Contract cash earnings show a similar upward trajectory, indicating that wage gains are becoming increasingly broad-based rather than concentrated in only a few industries. Japan's aging population and shrinking labor force have fundamentally altered bargaining power. Employers now face growing competition for workers, making sustained wage increases increasingly necessary. Higher wages are essential because they create the income needed to support stronger domestic consumption and establish a healthier inflation cycle. Corporate wage index. This chart illustrates why inflation dynamics are beginning to look much healthier. Nominal wages continue rising at one of the strongest rates seen in years. More importantly, real wages have finally turned positive after an extended period of negative readings. This represents a major milestone. For several years, inflation consistently exceeded wage growth, reducing household purchasing power. Today, falling inflation combined with stronger wage gains has reversed that relationship. Positive real wage growth increases consumer confidence, supports spending, and reinforces the broader transition towards sustainable domestic demand. CPI and core CPI inflation has clearly moderated from its peak. Headline CPI and core CPI both surged above 4% during the height of global inflationary pressures. Since then, both measures have steadily declined toward the Bank of Japan's inflation objective. Importantly, inflation is no longer being driven primarily by imported energy costs. Instead, price increases are becoming increasingly domestically generated through wages, services, and stronger consumer demand. This represents a healthier inflation environment than the supply shock driven inflation experienced during 2022 and 2023. CPI contribution breakdown. Breaking inflation into its individual components provides additional insight. Earlier in the cycle, energy and imported goods contributed heavily to overall inflation. Those contributions have now faded significantly as commodity prices normalized. Meanwhile, services and core inflation remain relatively stable. Services inflation deserves particular attention because it is closely tied to domestic wage growth. When service sector prices continue rising while energy inflation declines, it suggests inflation is becoming increasingly endogenous rather than imported. For policymakers, this is precisely the type of inflation that supports gradual monetary normalization. Japan-US interest rate, differential, and USD-JPY exchange rates continue to be heavily influenced by interest rate differentials. As the gap between US Treasury yields and Japanese government bond yields narrows, the yen has strengthened from its previous lows. The relationship remains intuitive. When US interest rates greatly exceed Japanese rates, capital flows toward dollar-denominated assets, weakening the yen. As those differentials compress, whether because of Federal Reserve easing or gradual Bank of Japan tightening, the incentive shifts. The stronger yen also reduces imported inflation, helping stabilize consumer prices while lowering energy import costs. Nikkei 225 and USD/JPY Japan's equity market continues to perform remarkably well. The Nikkei has reached new historical highs despite periods of exchange rate volatility. Several structural factors explain this strength. Corporate governance reforms continue improving shareholder returns. Companies are deploying record cash reserves more efficiently through higher dividends and share buybacks. Artificial intelligence and semiconductor investment cycles have boosted technology-related firms. Meanwhile, a weaker yen continues supporting export competitiveness for many large multinational companies. Rather than relying solely on currency weakness, Japanese equities increasingly benefit from genuine improvements in profitability and capital efficiency. GDP growth. Looking at the longer-term GDP trend places recent developments into perspective. Japan experienced one of the sharpest contractions during the pandemic before recovering rapidly as restrictions eased. Since then, year-over-year growth has normalized toward a more sustainable pace. Quarterly growth continues to fluctuate, which is expected for an advanced export-oriented economy. The important observation is that Japan has avoided slipping back into prolonged stagnation despite multiple global shocks. Instead, economic growth appears modest but resilient, supported by gradual improvements across domestic demand, wages, and investment. Retail sales. Retail sales provide another window into consumer behavior. Although month-to-month readings remain volatile, the longer-term year-over-year trend has remained positive. Consumers continue spending despite higher prices, supported by improving labor market conditions and rising wages. Recent acceleration in retail sales suggests households are becoming more comfortable increasing discretionary purchases as real income recovers. If this trend persists, stronger retail activity should reinforce broader GDP growth through higher private consumption. Consumer confidence. Confidence indicators reveal how households perceive the future. Overall, consumer confidence has gradually improved from earlier lows, although optimism remains below historical highs. Employment expectations remain relatively strong, reflecting Japan's exceptionally tight labor market. Income expectations have also improved alongside accelerating wage growth. The weakest component continues to be perceptions of overall living conditions, highlighting that households remain sensitive to higher prices despite improving incomes. Nevertheless, the broader direction remains encouraging as confidence gradually recovers alongside real wage growth. Monthly exports and trade balance. Finally, we examine Japan's external sector. Export growth has strengthened considerably over recent months, supported by recovering global demand and continued competitiveness in high-value manufacturing. The trade balance has also improved after earlier deficits caused by elevated energy import costs. As import prices normalize and exports continue expanding, Japan's external position becomes increasingly supportive of overall economic growth. Looking ahead, export performance will depend largely on global manufacturing demand, particularly from the United States, Asia, and semiconductor investment cycles. While external risks remain, Japan's trade outlook appears substantially healthier than it did just a year ago. Japan's economy is undergoing one of its most significant structural transformations in decades. Growth remains moderate, but its quality is steadily improving. Inflation is becoming more sustainable. Wages are finally outpacing prices. Manufacturing is stabilizing. Consumers are gradually regaining purchasing power, and financial markets continue reflecting renewed confidence in corporate Japan. Challenges certainly remain. Demographic headwinds, global trade, uncertainty, and monetary policy normalization all present meaningful risks. Yet the broader macroeconomic picture suggests Japan is moving away from the deflationary mindset that defined much of the past 30 years. For investors, this shift deserves close attention because structural transitions often create opportunities that cyclical fluctuations alone cannot. Thank you for watching YCC Capital Macro Research. If you found this analysis valuable, subscribe for more data-driven macroeconomic research as we continue tracking the world's evolving investment landscape.